Welcome to another edition of On the Money with the Certified Financial Group right here on News 96.5 WDBO. We are here with the Oracle of Orlando, Joe Burt, alongside Aaron Burt. Good morning, everyone.
Hey.
So you guys can do that for a while.
Yeah. Saturday morning, let's do it.
Let's do it. Joe, what are we here to do?
Well, Aaron and I are here to answer any questions that might be on your mind regarding your personal finances. As we say, we go through life trying some of this, trying some of that, wake up at 55 years old, look across the kitchen table at Loretta and say, honey, you know, it'll be too long, the paycheck's going to stop, and we got all those plans. How are we going to live? And it's what Aaron and I and the 10 other certified financial planner professionals at CFG do day in and day out for a fee. But on Saturday morning, we answer those questions for free. So if you have any questions that are on your mind regarding your personal finances, as it relate to questions about stocks and bonds and your IRA and a 401k and mutual funds and real estate and long-term health care and annuities, life insurance, all that and more, those are the things we deal with day in and day out. So as we like to say, we are here, and we are the only financial call-in show in Central Florida that's hosted exclusively by certified financial planner professionals. So we are here to take your questions, and the good news for you is the lines are absolutely wide open. And if you want to peer behind the scenes here, look into the studio, our director there says what we need to do is just type fb.com/certified financial group into your browser there, and it'll take you right into the studio, and you can see Aaron and me in a little TV action this morning. So fb.com/certified financial group, and you'll get the show live, not only the audio but the video. And I want to apologize for our regular viewers, listeners that have been tuning in over the last few weeks. So we've been experimenting here. It's a learning process for us. But my executive producer there, Donnie Morehouse, says we finally got it figured out with help of Kyle Cassandra here. So we got it.
We got it?
We got it. I think we're ready to go. So if you have any questions regarding television, radio, and all that stuff, we are here, and the lines, as I said, are absolutely wide open. So pick up the phone and dial these magic numbers.
844-220-0965. 844-220-0965. We also have the text machine up and running as well. 21232. That is 21232. Aaron Burt's going to kick off today's topic here. Could your long-term care premiums be hiding in plain sight?
Yeah, so long-term care has been a topic when we meet with clients more and more. It's something that's been coming up that people want to discuss. And for those people who don't understand what long-term care is, it's an insurance that you can purchase that allows that will pay you. Basically, you'll be able to claim on this policy if you need long-term care. Now, what is long-term care? Well, it covers expenses for going into a facility and receiving treatment, or for having someone come into your home to take care of you as you age. And usually it goes into effect if you can't do 2 of the 6 activities of daily living. An activity of daily living is you can't dress yourself, you can't transfer yourself, you can't feed yourself, you can't bathe yourself, you can't go to the bathroom by yourself. I always forget. I can't ever remember the last one.
The last one is you can't remember.
Yeah, you can't remember. You can't remember. That's one that actually trumps all the other ones.
That's an automatic qualifier.
It is an automatic qualifier. If you have
dementia or Alzheimer's, that automatic qualifies.
Which really is one of the scariest ones, because those are the ones where your body is perfectly fine and your mind is just not there, and you really need more. You need help, and it's expensive. So long-term care insurance will start paying if you have dementia or can't do 2 of the 6 activities of daily living. So that's basically what long-term care insurance is all about. And there's different ways to pay for it and have it, and we can get to those throughout the show. But I think we have a caller on the line.
Yes, we do here, Mr. Kyle.
I was waiting to do that. All right, let's go to our phone calls at 844-220-0965. Talk to Mike in Deltona. Mike, you're on with the Certified Financial Group. Good morning.
Good morning, Mike. What's up?
Good morning. How are you guys doing today?
We're doing great. What's up?
Okay, so just a little background. I'm 45 years old. I am a medically retired police officer. I get a medical pension. I am currently working, however, just with age and everything, getting progressively, it's getting to the point where I'm going to be retiring soon. I know at 45, but I did get injured in line of duty. But my question is, can I take Social Security early, and at what age? And also, I know there will be a gap between when I do retire and collecting for other pensions and stuff like that. But my question is mainly, can I take Social Security early?
You can take it. Well, you can. The question is, do you qualify for disability under Social Security? And I presume you've checked that route out, right?
Well, I tried before, and I couldn't even get through the first window because it said I wasn't 50 yet.
Okay.
So, but I am disabled through the police department.
Okay. So it's a question of whether or not you qualify for Social Security disability, which you can get before retirement age. If you don't qualify for that, then the earliest that you qualify for Social Security is age 62. And your full retirement age is probably 67 and a few months. And then you had a question, I think, about earning between if you start getting Social Security.
Well, yeah, I was just curious because I get a medical pension, and it's a decent pension, and that's what we're hoping to live off of. I mean, I'm pretty sure it's enough for us to live off of our house we paid off in a couple of years and all that. But I'm just curious as to the main question was the age.
60
retiring early, and then that gap between there.
If you don't qualify for disability Social Security, the earliest age you can collect retirement benefits is 62. And if you're working between 62 and full retirement age, you lose $1 for every 2 that you earn over $17,000 and change.
But that's earnings. I don't
that's
think
earnings.
that's
It
going
does
to
not apply
apply
pension.
with
Thank
the
you.
pension.
Yeah, exactly. It's not your pension. It's W-2 income or self-employment income. So age 62, if you don't qualify, the bottom line is if you don't qualify for Social Security disability, the earliest you can qualify is age 62. Let me ask you, does your police pension have a cost of living adjustment to it?
It does. I get, during the Obama years, I think I got it 3 times at 1%, but currently the last 2 years I've gotten a 2.5% and a 2.2%. So it is, right now it's doing really, really well.
Good.
But even if it stayed stagnant for a few years, we'd be okay. But it does have a cost of living adjustment to it. Yeah.
Great. Well, thanks for your service. Sorry about your disability.
Yeah, and I need to point out, I don't think you said you're not 50 yet. There's not a that I can recollect, or I'm looking online.
You're right,
during
Aaron.
the meeting that there's a age restriction for Social Security disability. That I'm
when I went onto the website, the very first thing it asked me was my date of birth. And when I put my date of birth in, it says, sorry, you're not 50. It wouldn't even let me into the site until I hit my date of birth. And now that was it wouldn't. Now, I haven't tried it very recently, but the very first thing I had to do was enter my birthday, and it says, you're not 50, you don't qualify. It wouldn't, like it says, lock the door. It wouldn't even let me into the next part.
Well, we'll do a little research here, and stay tuned, and we'll try to find the answer for you.
Well, I appreciate that. Thank you very much.
I appreciate your call, and thanks for your service.
Thank you.
Interesting question. All right, Mike, thank you so much for the call. If you want Mike's line, it's 844-220-0965. That's 844-220-0965. Let's go to Jamie in Deltona. Jamie, you're on with the Certified Financial Group. Good morning.
Good morning, Jamie. What's up?
Hey, guys. Good morning.
What's up?
I called last year. I had a 401k, and you guys told me if you had target funds, put them in there. At the time, my financial I don't want to say the name, but they didn't have those, but we're switching over to one that do have target funds. Should I still take that advice now?
Well, it's probably as good today as it was then. What do you think, Aaron?
I agree.
For our listeners that might not be familiar with how a target date funds, why don't we tell them what it is?
So a target date fund is meant to correspond with when you plan to retire. So how old are you, Jamie?
I'm 48.
48. So let's say you're going to retire in
17 years, 20 years, say?
20 years. So that would put you
20 years, yeah.
Mm-hmm.
Okay, so that would put you in the 2035 fund, somewhere in 2035, 2040 fund. And so if you invest your money in that fund, whoever manages that fund for you, whether it's Vanguard or T. Rowe Price or Fidelity or whoever, they will have a 20.
Fidelity.
Okay, so they'll have a 2035 or 2040 fund for you to choose from. And as you approach that retirement age, the fund is going to get more conservative. So it's probably pretty aggressive now because you're 20 years away or so from retirement. But all target date funds have a glide path towards that retirement date. And the glide path is meant to basically get more conservative as you approach it. And you can go online and type in the ticker symbol or put in the name of the fund, and you can actually research the glide path and see how aggressive it is now and how it becomes more conservative as it gets closer to that date. So target date funds are a great way in order to diversify your portfolio in a 401k or a retirement plan. If you're not working with a professional and don't want to be picking funds on your own, it's kind of a set it and forget it type strategy, and it's recommended for anyone who's basically out there working on their own that doesn't know what else to choose. So it's.
I got another question too.
Sure. Go ahead.
All right. Say the old retirement fund, you had all your, contributions going in a certain retirement accounts. Now, when you switch over, does all of those can all those be switched over to the target fund, or is that just a new contributions on my weekly paycheck go to target fund.
No, you should have the ability to switch it over. So if you're changing providers, they do that in a couple different ways. They may actually default you into a target date fund and liquidate everything that you currently have. Now, they have to give you notification of what they're going to do. They can't just do it without notifying you. But you're going to get...
we got a big meeting to go over everything in a couple weeks. So
okay. So what they're going to do is either one of two things. They're either going to liquidate your current holdings and transfer you into what's called a qualified default investment alternative, or a QDIA, which is usually a target date fund. So they may liquidate your entire account, move into a target date fund, or they're going to map it over. So if you're in like all large cap growth funds right now, they may map you all to large cap growth funds in the new plan. So that's kind of the two ways that they generally do it. But once it's in the new plan, you can transfer that to either current earnings going in, or current contributions going to the target date fund and leave the current stuff, or put everything into the target date fund, both past contributions and current contributions.
So the bottom.
Should you diversify it, or should I just put everything in the target date funds?
If you're not working with a professional, Jamie, I would just do the target date fund. Set it and forget it, and don't look at it for 20 years.
Yeah, the target date fund is diversified.
Yes.
So
yes.
Okay, gotcha.
We get that question a lot too. People think they need to be in multiple target date funds in order to get diversification. The target date fund, by its very definition, is a diversified mutual fund.
If you don't have somebody,
Great show, guys. Thank you.
Thank you. If you don't have somebody, this is for all of our listeners. If you're not working with an investment professional that can coordinate your 401k with your other outside investments, you go the simple route. Use the target date funds, and some plans have what I call risk-based portfolios, everything from conservative to aggressive, and some in between. Use that as an option, but don't be trying to pick individual funds, because this is a mistake we see time and time again. People they get their booklet, and what did good last year, or they go online, what's doing good at the moment, or they listen to CNBC, and everybody's putting their money in the S&P 500. This is where I want to put my money, only to be disappointed and get out at the wrong time, and they jump back in. It's the biggest mistake, and what's why most people are poor investors. Use the target date funds or the model portfolios in your 401k, and don't look at it. Don't be.
That's simple.
Yeah, and people think they need to get online. We have clients come in that confess that, I look at this every day.
Oh, why do that to yourself?
Exactly. Well, what do you do with your plan?
Well, once a year.
Yeah.
When I do my taxes,
Thank
I
you.
check in just to make sure everything's good and looking good.
Thank you. And some years it's down, right?
Or if usually in September, if I take a look at our finances and it's saved, and you know what, I can put a little bit more of a contribution in for the next 3 months.
There you go.
I'll go in there and I'll make the adjustment.
And
while I'm there, I'll look around, but I'm there to make the adjustment. Other than that, I don't go in it.
Good.
Like we say, don't get in the cockpit and start playing with the controls. Just let the pilot fly the plane and get to where you want to go.
All right, just like that.
That's
well,
it.
844-220-0965. That's 844-220-0965, because I go try to make sure I can get underneath that tax bracket. If the math is there, I'll go make a contribution.
And I have an email here from one of our regular listeners. So, Daniel, if you're listening, I want to, or Gil, if you're listening, I want to give you the information that you want. First question is, can you reserve a spot for me in your November Medicare presentation? Here's what you need to do. You need to go online to get this answer, as well as the second question that you have, who is the elder affairs attorney we recommend? Both of those are on our website at financialgroup.com. For the November Medicare presentation, click on workshops. For the estate planning, click on estate planning. That'll get you right information about Murphy and Berglund, who we use for elder care. The third question you have, Aaron, wants to know a money market type account that keeps cash immediately available but pays a reasonable rate. So what do we have here?
Well, there's all sorts of different money markets to choose from. We've been searching around, and
we'll get back to you after the break.
Okay. Yes, we'll call that a tease.
Tease.
The old
Tease.
radio
Money market tease.
lingo. Yes, 844-220-0965. Right now we pause to get the three big things you need to know. DBO, we've got the Oracle of Orlando, Joe Burt, alongside Aaron Burt, taking your phone calls at 844-220-0965. That's 844-220-0965. We also have the text machine up and running as well, 21232. That is 21232. Before we get to latest news, weather, and traffic, at 4 minutes left to go.
Love this music, man.
You like this one?
Love this music.
This is a good one.
Yes.
Yeah, this is when the hook comes in there.
Get on the Harley and go.
All right. Yes, exactly.
That's it.
Put the top down.
That's it. You got it, baby.
All right, let's get back to Frank in Altamont Springs. Frank, you're on with the Certified Financial Group.
We had a tease, though. The tease on the money market.
Okay, how you gentlemen doing?
We're doing great, Frank. What's up?
Okay, listen, you had a call before talking about he had a medical disability, a medical pension, and he was asking a question about if you can get disability under 50. Well, I have a pension, but it wasn't medical. I got out, I did my 20 years of service, and I was diagnosed with something that was pretty serious during my working, when I was working. So after I retired, I got my regular pension, and then I applied for disability. I was under 50, and it did take a couple of times. I did have to get a lawyer, and my doctors, of course, got involved. But it is possible to get a disability pension. I mean, the disability Social Security before 50. It's just they just frown upon it.
Yeah, that's the conclusion that we came to, and you may need to get an attorney. Aaron got a little bit more detail there, and why don't you clarify that for us?
So on the Social Security website, it sounds like the main thing is really work credits. So getting 40 credits, and then 20 of those credits have to be earned in the last 10 years of ending with the year in which you became disabled.
Now,
so
what
maybe
what is a credit?
A credit's a quarter.
That's right.
Yeah. So
you have to have 10 years of work, basically, and as he said, the last 5 of those, it's four credits per year,
have to be earned within the last 10 years.
Yes.
Yeah.
Yeah. So he's eligible. You may have to get an attorney involved, but go for it and see if you qualify. Yep.
Yeah. So we appreciate the call, Frank.
Thanks, Frank.
Thanks, and good luck to you.
Good luck to you.
Okay, Frank, and then we had a tease before we went to the break.
Yes, we had a tease on the money market account.
Yeah, so the question is about money market accounts because for the most part, people have been really upset. Money market accounts haven't paid anything, neither bank accounts or savings accounts for that matter. Now with interest rates creeping up, we're starting to see money markets people are getting more interested in where they can put some cash and get some sort of reasonable rate of return. So there are there's hundreds, probably thousands of money market accounts out there. And there's also lots of savings accounts out there as well. One way to check on savings accounts is to go to bankrate.com. Actually, I think they have money markets on there too. You can plug in what you're looking to do, how much money you have to invest. Obviously, the more money that you can put in, the higher the interest rate you can get. So I know American Express has savings accounts now, and your local bank has savings accounts, though they haven't quite kept up with the interest rates, paying you enough interest. So there are money markets out there that are paying over 1.5% to 2%, maybe if you can get lucky, if you got enough money to put them in. Again, you got to do some research and find out what's out there. So,
but once again, a money market account is really not an investment. It's a place to park your money for short-term needs. You'll never get rich because the income is fully taxable to you, and it's certainly growing at a rate slower than inflation. So the combination of taxation and inflation will eat your lunch.
Okay.
But it's money market account is not a bad place to park your money short term. That's why they're there.
It's better than putting in a checking account earning you 20 basis points.
Yeah, exactly.
Right.
All right, 844-220-0965 is the number to dial up to ask Joe or Aaron Bird a question here. 844-220-0965. We also have the text machine up and running as well at 21232. We will continue to play it tomorrow with the Certified Financial Group right here on News 96.5 WDBO. Welcome back to On the Money with the Certified Financial Group here on News 96.5 WDBO. We are taking your phone calls with Joe Burt and Aaron Burt here on the station, 844-220-0965. Joe, we just remind everybody that may have joined us during the latest news, weather, and traffic. What can they call you about today?
Aaron and I are here to answer any questions that you have regarding your personal finances, decisions or questions you have about stocks and bonds, mutual funds, your IRA or 401k, long-term health care, annuities, life insurance, reverse mortgages, all that and more at Certified Financial Group. We are Certified Financial Planner professionals. We deal with those questions every day, answering them for our clients for a fee. But on Saturday morning, Aaron and I are here for free. So if you have any questions regarding those kinds of things, at Certified Financial Group, we do financial planning and wealth management for a fee. We work with our clients. We put it in writing. In fact, this is a very important thing. There's a lot of folks out there that hold themselves out as financial planners. Nothing wrong with that. Hold themselves out as advisors. Nothing wrong with that. Before you engage an advisor or a financial planner, you want to ask him or her to put in writing the fact that they will work with you as a fiduciary. It's a very important distinction in the investment world. It's where a fiduciary is working on your behalf, not on behalf of his or her company. So we are fiduciaries in that regard. We have been certified by CFEX, C-E-F-E-X. That's CFEX. You can go to cefex.org, or you can go to our website and learn all about that. There are fewer than 1% of advisory firms in the country that are CFEX certified, and we happen to be one of them.
Fewer than 1%
Yes.
in the country.
Yes, there are fewer. There are 12,000 registered investment advisors. Those are folks that have over $100 million of assets under management and are registered with the SEC, the Securities and Exchange Commission in Washington. And we are an SEC advisory firm. And there are 12,000 of those folks out there, and there are fewer than 100 that are CFEX certified. And we are very, very proud of that. We have to get recertified every year, and we're about to get recertified again this month, I think, or next month. So they come in and they do a thorough exam of your firm, all the things that you do, how you do it, your disclosures, your security, your internet security, your firewalls, your perimeter security around your building. I mean, it's amazing. We have to do a 100 and some page questionnaire that has to be filled out, and it is a task. But we're very, very proud of that designation, and that's what we do at Certified Financial Group. So if you have any more questions, or go to our website, financialgroup.com. You can learn all about it.
All right, just like that. All right, again, 844-220-0965. That's 844-220-0965. Let's go to Oviedo and talk to Renee. Renee, you're up next with the Certified Financial Group. Good morning.
Good morning, Renee.
Hey, Renee.
Good morning. Hi. My question is, when I sign up for Medicare at 65, I've heard you should have the Medicare premiums taken out of the Social Security checks. If you aren't taking Social Security benefits yet, is there an option when you do sign up for them that it's taken out of your Medicare, or they just do that automatically?
If you are on Medicare and you are paying your Part B premiums or whatever Part D, you will be writing a check to them if you are not on Social Security.
Right.
Once you go on Social Security, then they will start deducting it automatically from your Social Security check.
Oh, it is automatically. Okay.
Yes, ma'am.
Yep.
Okay, wonderful. Well, that was easy. Thank you so much.
How about that? You're quite welcome. And you're at or near 65. Just a reminder, coming up in November, I think, is Gary Abel. He's holding his workshop today on Medicare. It is absolutely full. It's going to be almost standing room only for that one. And I think he's doing another one, the same one again, I think, in November.
It is in November.
But Joe, how do I not make the mistake of learning about these workshops after they're full?
All you have to do is right now is go to our website, financialgroup.com, click on workshops, look at the upcoming ones. And we host these, Kyle, at our office in Altamont Springs, right there on Douglas Avenue, just south of 434. In our classroom, we have state-of-the-art equipment. We accommodate about 25 or 30 people very comfortably, provide you some refreshments. It's absolutely free. And people say, well, why do you do this stuff, Joe? Well, we do it for basically two reasons. So you don't become a retirement casualty, number one, because I think we have a retirement crisis in this country because they don't teach us this stuff in school, and we want to show you the things that we have learned over the years. And secondly, to introduce you to our firm and what we do for our clients and how we work with our clients for a fee in the financial planning arena and wealth management arena, and work as fiduciaries. So whether you have a need for our services now or sometime in the future, perhaps you'll give us an opportunity to earn your business. So if you want more information about what we do as Certified Financial Planner Professionals, you can go to our website. That's financialgroup.com. And, I have an interest in learning about what other planners are doing around town, other folks that do these radio shows. We are one of the few radio shows that this is not a 1-hour infomercial. Some of these shows are recorded, and they won't take calls.
It's themselves, yeah.
Yeah, I mean, they run and there's nothing wrong with that. I mean, it's their marketing shtick. But we get up here on Saturday mornings, and we never know what's on the other side of that line. No, this is live radio.
Yes.
And as Certified Financial Planner Professionals, we need to know the answers. If we don't know the answers, where to find them. So we're glad we have the listeners that we have. We've got a great bunch of listeners out there, but I think that makes us a little bit different from other folks out there that just run a 1-hour infomercial about what they do and why you want to do business with them. And nothing wrong with that. It's a marketing approach, but I think it's how we're a little bit different.
So speaking of infomercials, if you are interested in any of our our seminars, you can go to our website, again, financialgroup.com, and at the top of the page is the workshops and events link, and all the seminars are available for you to sign up right there. And actually, it looks like we've taken down the November healthcare options and retirement, which tells me that it's probably full already. So, but they do keep a waiting list. So if you are interested, you can contact us directly and just say that you're interested in the next one, and we will add you to the waiting list and contact you when that becomes available. So it's probably going to be sometime next year. because we have a seminar every month, and that one's already taken down. So you're looking at January probably of 2019.
Right. And Gary Abley has a full house today, and he's doing that, and we do more of these. This is the real challenge when you get to be 65, or just before you're 65, your mailbox explodes.
Yeah, with all
that
things,
stuff, and you're confused as anything. You're trying to pick out what I need to do here, what I need to do there. And
or 55. 55, I see people get it. Yeah.
No.
Absolutely. My mom got it at 55. My neighbor at 55.
Medicare?
Well,
eligible for Medicare.
all that stuff.
Yes,
but the retirement plan, plans, the insurance, IRAs, and all that stuff. Seems like the mail starts at 55.
Yeah. Well,
that's when they're trying to get you to start thinking about retirement. And we want to see people come see us even earlier than that, because if you come see us even earlier, it's easier to fix your situation and make sure that you're on the right path instead of waiting at 55 and then when you only got 10 years to do it versus.
You guys want to see 25-year-olds.
Well, we're seeing more and more young people in our office now. But the toughest cases that we work on as planners are folks that have not done any planning in retirement. They do what I call back of the envelope financial planning, and they've retired, or they're about to retire. They say, "Well, I'm going to get this in Social Security. We have this much in interest. We know what our bills are. We're going to be okay." And then the wheels are coming off. They come to see us 6 or 7 years in retirement and want to know what happened. And those are very, very difficult conversations because oftentimes they require some major lifestyle changes. You want to get your options and your ducks lined up before you pull that trigger on retirement. We have time and time again shown clients when we do planning what the difference is by working another year or two. And oftentimes it's several $100,000 down the road. Not that they're earning several $100,000 today, but the fact that, number one, they can add to the cookie jar and put more money into it, and they're not dipping into the cookie jar too soon. So by adding and not taking out, that multiplier effect is huge, and people don't realize that.
Yeah, the compounding interest.
Yes, and this is what planning is all about. This is why I think we're different from folks that just want to manage your money or sell you some product. We believe that your investments ought to be done on a solid financial planning basis, and know what you need to do before you pull that trigger. So
I will attest to everybody that I've known at the Certified Financial Group always seems to truly care about their clients and their well-being. I will say that.
The check's in the mail.
There's other times where I'm sitting there going, okay, yeah, it's just another, they work for one of the big, the monster retirement companies and then sell, but you guys are independent. You don't have any house products.
Nope.
And it's everybody that I've talked to. I have my account with CFG. Those guys are really good.
Yeah,
so
you have to.
That's why I enjoy doing your show.
You're not around as long as we are.
At 9 a.m.
When you've been around for 40 years, I think you can't be in this business for that long in this town without, doing it. And we're very, very proud of what we've done. We're in the third generation of clients. It's the grandchildren of some of my very first clients, and we have clients from all walks of life. We've got professional athletes, lottery winners, and grandchildren, and everybody in between. And some firms specialize, they only want to work with people that can bring you $500,000 or $1 million, or only with doctors or something like that. Our attitude has always been we want to work with anybody that wants our help. So you don't need to be a multimillionaire. We can't help you if you're just getting by and have credit card debt. We can direct you as to what you need to do in that regard. But if you're on solid footing and just want to get your act together, be sure your act is together. That's what we do as planners. We charge a fee for that, but we offer a complimentary consultation where it's only fair to you and fair with us, see how complicated or straightforward your situation is. We'll tell you what our fee is, and then you can tell what you like to do. But at least you know how we do it. But we strongly recommend that before you retire, sit down with a certified financial planner professional, either us or one of the many others here in Central Florida, and be sure that they're going to sign on for you in their agreement that they say they're going to be a fiduciary. That is critical, because this is where you are assured that they are doing what they need, what needs to be done. It's being done on your best interest, not on the firm's best interest.
844-220-0965 is the number to dial us up. 844-220-0965. The lines are wide open, and usually when the lines are wide open, I like to ask dumb questions.
There's no
stupid, basic, dumb questions. That I swear, Joe, these are what my friends ask me because they think I know because I do your show. But target funds on a 401k. We had that caller back. That is one of the most common. Is that where, if anybody tries to fill out their 401k, I have no idea where to put the money. Pick your retirement date, pick your retirement age, and the general rule is to put it in that target fund, correct?
Yep. That's the general rule.
That's
very
just
good,
like that.
See?
Yeah,
you're learning something.
It makes it. That is the foolproof way, if you're not working with an advisor, to not mess up your plan.
Yes.
Just because it's designed to get you through your working years and designed to become more conservative as you approach that retirement date. So at the bottom doesn't fall. Now there's no guarantees, but it's a heck of a lot better than trying to pick individual funds or listening to your coworker or reading Money Magazine and jumping in and jumping out and that kind of stuff. So use the target date funds and or the risk models that are oftentimes available in the plans. That's what we tell our clients. And unfortunately, because they get on your phone today, right?
Yep. Yeah, people, and we see it all the time. People look at their lineup and their plan, and they bring it into us, and they're like, well, this fund's been doing great. This for the last year, it's up 30%. I'm putting all my money into this one.
You should have been in it last year.
Yeah, and then what ends up happening is that they end up getting whipsawed, and that's why most people are poor investors, really, because they chase returns and moving money around and buying high and selling low.
That's like right now, the S&P 500 is in the press today, record highs. We were talking about that on the way down. So go ahead. What we talk about there?
Well, yeah, the S&P 500 is at a record high, but what most people don't realize is that it was really close to this record high back in January. So really, we've just gone sideways for basically the last 8 months. And so, yeah, we're at a record high, but the year for pretty much has been sideways. So
people might be looking at their portfolio today, going online. Well, man, how come I'm not that high? Well, chances are because unless you own the S&P 500 or the Dow 30 or the NASDAQ purely, you're not reaching those record highs. But that's what diversification does for you.
Right.
You're going to have years in which you lag the market. But in the long run, by diversification, you'll avoid the big swings like we had in 2008 when the bottom fell out of the S&P 500 and people lost 40%.
Well, they only lost 40% if they sold.
If they sold, that's correct.
And stayed diversified and followed the plan and had someone who was their coach and walked them through it.
Right.
Then they didn't lose that 40%.
Well, John has dialed this up here. John's got a quick question here for you. John, go ahead.
What's up, John?
Yeah, good morning. Thanks for taking my call.
Of course.
I'm 75, and I have mutual funds, and I do have a pension, but I've been told I should have some annuities. And I was just wondering, I've heard good and bad things about annuities, and at age 75, is that something I should look at?
Well, what I like to know, let's start with basics. What have you been told about annuities? Because there's a lot of stories out there. I want to be sure we're on the right track here.
Well, some people say they're not good, and some people are saying they're good because the people that sell them are the ones that are making big commissions on annuities.
Right. First of all, you want to stay away from the ones that are offered through the free lunch and dinner seminars. Okay, because those are generally the worst, because they lock you up for a long period of time. They get you in the door by telling you that you get the benefit when the market goes up, and when the market goes down, you don't lose anything. And they have oftentimes they'll have a bonus attached to them. We're not a fan of those kinds of annuities for that reason. We like the pure vanilla annuities for the most part today, and that's like buying a CD from an insurance company where your principal and interest is guaranteed, simple dimple. There's no bells, whistles, and all this other kind of stuff that goes with it. Current rate on 3-year annuity is what, Aaron?
3%.
3% guaranteed, tax deferred. You're not going to get rich. But if you look at how one of these what are called index annuities are put together, they really can't give you long-term more than what you can get in a guaranteed fixed account. What they're doing is they're selling you, you think you're buying filet, but actually you're buying hamburger at the end of the day. Go to our website, that's financialgroup.com, click on the tab I think is Info to Know, and there's some white papers that are there that talk about these kinds of investments. So,
John, can I ask a question? Are they trying to tell you that you need more guaranteed income? Is that why they say you need an annuity?
Yes, guaranteed, but you don't have to worry about it, even though they're saying it's fixed at like 3 to 4%. It'll never get lower than that amount.
Sure.
So there are annuities where you can basically buy a pension.
Right.
So annuity is a very general term, but there are annuities also where you can buy a pension where you give them a lump sum of money, and then they're going to guarantee you a payout for your life, or maybe your life and your spouse's life as well. So,
yeah.
But the problem with those type of annuities right now is because of interest rates being so low, the amount of income you're going to get for the amount of principal you have to put up usually doesn't make a lot of sense right now. So, I mean, this is one of those instances where I would say we would want to have you come in, do a financial plan, and see if that really makes sense for you. Because it's really not anything that we can, without doing a complete financial plan and knowing your whole picture, it's very hard to opine on annuities. But annuities, there's all sorts of types of annuities, and it's very broad and general term.
So it's, you need to really make sure the person you're dealing with is reputable, I guess.
Well, not that they're reputable, but they really have a good understanding of what it is you're trying to accomplish. They're not just selling you a product. I misled you, though, John. When you go to our website, you want to go to Learning Center, at the tab Learning Center, and then go to Info to Know, and that's where you'll find information about the annuities and the other schemes that you hear on the radio and television.
Mm-hmm.
Okay,
All right.
and if I would like to, I could call, make an appointment to come in and have somebody look at my
Of course.
situation.
We offer an
Anytime.
absolutely complimentary consultation. Come by for a visit. We'll give you a cup of coffee. You'll get to know us. We'll get to know you, and we can tell you what we do and how we do it.
All right, give them the number to do that.
407-869-9800, 407-869-9800, or 1-800-EXECUTE if you're executing a legal document.
All right.
So hope to see you, John. Thanks for the call.
Thank you so much, John. If you want John's line, it's 844-220-0965. Right now, we pause to get the three big things you need to know. It is the final segment of On the Money with a Certified Financial Group. Where does the time go each and every Saturday at 9 a.m.? I always see that final segment, and
There it is.
every single week.
Another hour of broadcast perfection done.
I know.
It is.
2 minutes since over the latest news, weather, and traffic. So one more call we can squeeze in here. Let's get to Homer in Orlando. Homer, you're on with the Certified Financial Group.
Homer.
Good morning.
Homer, you know, in all the years we've been doing this radio program, we've never had a Homer call.
Really?
Never.
I thought we've had a Homer before.
Never.
Homer, have you called this show before?
Yes, I have.
I was going to say, I thought we've had Homer before.
So much for that idea. All right, Homer, what's up?
What I'd like to know is why did they wait till your hair's dead before you can get Medicare?
Well, it's because they have to figure out actuarially what it's going to cost, and we don't have unlimited resources to be able to pay for medical insurance for everybody in the country. So they figure that you stop working, and then at 65, then you're eligible for Medicare, and that stops.
And wasn't Medicare like Social Security is meant to be a safety net kind of thing? So, I mean, what was the life expectancy when Medicare launched?
Well, I know when Social Security life expectancy was 65 back in 1935. So when Medicare followed up thereafter, but yeah, I don't think it was ever meant or intended to be a health plan like it is now. Right.
I think it was always meant to be a safety net, and so they weren't counting on people to be on it for that long.
Yep.
So
and it is not in good shape either.
Yeah. Well,
here we are.
That's it. What's the best website or the best phone number and website to reach you at?
if you want to reach us during the week, you can call us at our office, 407-869-9800, or better yet, go to our website, financialgroup.com. That's financialgroup.com.
All right, that's going to do it for this week's edition of On the Money. We'll be back next week, and we will continue to play it tomorrow.
Today!
Right here on News 96.5 WDBO.
Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but is limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Certified Advisory Corp is registered as an investment advisor with the SEC and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements.